Hello, everyone. Thanks for joining us today. There's still some people filing in, so we're just going to wait a few more minutes here, but I just want to come on and just to start to maybe make some introductions and talk a little bit about the format for today. I'll do more of a proper introduction, I think, once we reach the number of registrations that we have, or at least close to, maybe give it another 3 or 4 minutes. Just a few things. So you're going to see a chat box on the right-hand side. That's a private chat box, meaning that no one can see the comments of anybody else. Those come to us. And so what we're going to ask is that throughout the presentation, you can write some questions, and we'll do our best to join them all into kind of more condensed questions. And then we'll go through those in a few different sections. So one at the end of the text format, and then another one at the end of the updates, some final questions. So we'll wait a few more minutes. There's a pretty good amount of people that are joining on now. We are currently in Playa del Carmen. I know that there's going to be some people joining us from some other offices, meaning Josh's office in Puerto Vallarta, Carrie's in Nayarit, some from Marina's in Merida, and Curtis's as well in Cabo. So as people are joining, it's important to understand that we're going to talk, generally about taxes, and pretty well everything is going to be, for all of Mexico, right? There's not a lot of differences. There's only a few that are statewide. So if you're in Jalisco, if you're in one of the other places, just keep in mind that there are some slight differences, but we'll talk about those. So there's a couple of people here helping me, just so that you're aware. So if there's any questions, they're going to be passing them off to me. If there's any issues with sound, we still do live in Mexico. We have good internet, but sometimes it's not great. So if there is any issues at all, then feel free just to wait around. And we have 2 different internet systems here, so we'll swing from one to the other if we're having issues. If you're having issues, so we did some tests before, and if you're having some issues with sound or with video, we found the best solution is simply just log off and then follow the link again and then come back in. And that seems to fix everything. Sometimes there are momentary drops in sound, but keep in mind that we are recording everything, so you'll always be able to revert back to it. We'll also be taking some timestamps of everything, meaning we will, mark off in the email that we're going to send, we're going to mark off which section is which. So if you have to go back to something maybe that you missed, or if there's just one section that you're more interested in, then you can skip all the, the other uninteresting stuff that you don't really care about, and then go straight to that section. Just going to wait 1 more minute. We've still got a good amount of people coming on board. Maybe what I'll do is just start with an introduction. So at the end of the day, we're property managers. We're not accountants, we're not lawyers, but this is something that a lot of people were asking for. And so we've done our best to put together this guide for you. As a disclaimer, I certainly want you to keep in mind that this is our research that we've done. We've done it working with lawyers and accountants, and I'll introduce one of them here. But just keep in mind that this is a guide. We would always recommend that you confirm anything with a certified accountant or a certified lawyer. We always recommend that when it comes to taxes, before you do anything, that you do consult with a trained professional. Most people already have an accountant in their home country, but if some of the tax things that we'll talk about do apply to you, and even generally speaking, I'd always suggest at least you consult with someone here in Mexico, just to make sure that there's nothing that you're missing, because taxes and rules do change depending on your residency and some other factors. So just as a disclaimer, just to make sure that, I would always verify any information that comes your way, especially related to Mexican taxes, because I can tell you we've been working on this for quite a while, and it is ultra complicated, mostly because there's just not a lot of clarity. We can talk to 3 different people in the SAT office, and we'll talk about what SAT is, but essentially it's the tax office here in Mexico, and we might get 3 different answers on 3 different days. So it's taken a while to put all this information together. just some things to keep in mind. So I'm going to bring him on board. His name is Jorge Olivares. He works for a company called OP&A, and Jorge is a business and tax consultant. So I'm just going to bring him on board just so that he can introduce himself quickly. He'll also be here to assist me if there's any issues that I'm just, I don't know the answer to. He is the certified tax specialist. So if there's anything that I just really don't know when it comes to question and answer period, I'll bring Jorge back on board just to help me answer those questions. So Jorge, if you want to introduce yourself quickly, that would be great.
Yeah, Rick, thank you very much. Thank you very much. I'm Jorge. Hello, everyone. It's a pleasure to be connected with you this afternoon. So I will be here with Rick to answer your questions.
Perfect. Thank you, Jorge. Okay, so first things first, we're going to be doing the webinar in English. I am going to try and cruise through this. I realize this is dry material and it's not ultra exciting. So I am going to try and cruise through it as much as possible. If you go on the right-hand side of your screen, I'm not sure exactly what it'll look like on the cell phone version, but you might have to just mess around with it a bit. But there's a portion that says handouts, and I've included some handouts in there. So feel free to download those maybe before or right now so that you can follow along on there. Rather than on my screen, it'll be a bit smaller, or you can just use this to refer to later. But some of the handouts, there is the guide that we prepared and sent out to most of you. And if you haven't received it, here it is. I would also suggest that you re-download it, even if you have the old one, because we have made a few changes. We've added some extra graphs and some extra clarifications. Some of the wording in some instances was a little bit confusing, so we've just modified that a little bit, nothing major. And then we've made this great little workflow sheet. That workflow sheet is, in the most part, all you need. The guide is a detailed version. The workflow is just, for you to quickly understand, generally speaking, what your tax requirements might be. So I would download all of those, or both of those, and refer to them as you want. There's a chat box on the right that I was talking about. When I'm presenting some of the material, which I'm going to do in a few minutes here, it's best to close that chat box because it'll make the presentation or the documents a little bit bigger for you, or else it's a little bit small, so it's harder to see. So I suggest that you close that chat box when we're presenting that material. Okay, so just to go through quickly the agenda for the webinar, we're going to touch first on the taxes for foreign owners. And when we're talking about foreign owners, we're always talking about any non-Mexican person. Non-Mexican might not mean that you're a Mexican citizen, but you might have Mexican residency, meaning you're living here for over half the year. There's some different requirements. And if that's your case, then I would certainly ask you to reach out by email just to maybe get some clarification to see if whether or not you do qualify. We would revert you over to Jorge to chat with him. But that's an important distinction. But for the vast majority of you, will be considered a foreign owner. That's going to be the majority of it because that's the majority of our owners is foreign owners. We will talk about taxes for Mexican citizens, Mexican residents, as well as anyone who might have their RFC. And we'll touch on what those things mean. And then we're going to just very briefly, because it's a very quick conversation, is people that might not have a property manager and might be a foreigner. But that's a very simple explanation. Lastly, we're going to do some questions after that, and then we're just going to do some updates. Now, some of the updates won't apply to everybody. We are still rolling some things out in the different offices. So Puerto Vallarta, Nayarit, Cabo, Merida. We haven't rolled out every single initiative in every single office, but if you're interested in listening to it, if those don't necessarily apply to you and you're interested in listening, those are initiatives that we are going to roll out in some way, shape, or form in every office. Sometimes we're just limited by the location or some of the resources we have. So sometimes it does take longer in order to start that project up. So keep that in mind. I will be clear when we finish a certain section so that if you do want to log off, you'll be able to see the rest of it later, or if those things just aren't as interesting for you, then you can just log off and take the information you've already gotten. Okay, so let's get right into it. I'll try to keep this to an hour. Some of it will depend on the questions, but we'll try our best here. Okay. So a lot of the things I won't go through because you can just read through them. This isn't me standing up here and just reading you this guide because you can do that. It's going to be me explaining some of the things in a little bit more detail so that it alleviates some of that confusion, maybe some of that anxiety. So I just quickly want to go over these glossary of terms because they are important. The SAT, I mentioned it before, but that's our equivalent of the IRS, of the Canada Revenue Agency. It's our governing body that deals with everything tax related. EVA is a sales tax, or sometimes they call it the EVA or the VAT, the VAT. That's a sales tax, and it's 16% across the board. Doesn't really matter what you purchase. It's 16% across the board. ESR, that's the main one. That is income tax. And that's really what we're going to be talking about today, is that income tax portion. RFC and facturas are related. So an RFC is every company here is required to have an RFC in order to be legal. And it would be the equivalent to a tax ID number. Now, Mexico has implemented all these rules to try and curb some of the issues they have, such as money laundering. And so they developed this registered factura system in Canada, which is where I'm from, in the US, many other countries. There's going to be a system of just receipts. If you buy something, you get a receipt, and then with that receipt, you can claim it with your taxes, and then your accountant does this thing. Here, you need to have a registered factura. And that registered factura has to be from a company with an RFC. It has to be made, the payment for that expense has to be made from a bank account related to that company. And I think that's it. Those are the two main things that it has to be. And the bill has to be in that person's name that's making the payment or claiming that factura. So if I'm paying for an electricity bill, that bill has to be in my name in order for me to pay it and get an authorized factura. Before we start, I realized I didn't introduce myself yet. I introduced Jorge, but not myself, so I'll go backwards a little bit. My name is Rick Duren. I am part owner of Samson Waters. We're in Playa del Carmen today, which is where our main office started. The company was created, give or take, 8 years ago. Christine, my wife, and I created the company here in Playa, and then we've since grown our family quite a bit, and we've included Josh, who I was talking about earlier, in Puerto Vallarta, Carrie in Nayarit, Curtis in Cabo, and Marina also is a manager out in Merida, and she runs the Yucatan coast there. Originally from Canada, I always had the desire with my family to come to Mexico. This is an amazing country, and it's been our home for 8 years now, and we've been very thankful to everybody here for welcoming us and not kicking us out of the country yet. So it's been an amazing journey so far. Okay, so let me keep going with that. So the first option, or I guess the first scenario we're going to chat about, is when you have a registered property management company that's representing you, and essentially you're a foreigner. Now, this guide was written with Jorge's help, and so it was written in the perspective of what burdens and what payments we as a property manager have. And so some of the language will be directed more towards the company, but it all applies, and I'll clarify where needed, but just keep in mind that this part, option one, is more geared towards, it's more talking towards us, Samson Waters, the company. Okay, so as a company here in Mexico, there's been a lot of changes, especially property management. There's been a lot of changes in the tax rules relating to Airbnbs. I'm going to use the term Airbnb because it's one of the biggest platforms. When I say Airbnb, what I really mean is all of the rental platforms like VRBO, Booking.com, all of them. I'll just use Airbnb just so that it's a little bit simpler. So those platforms, Airbnbs, what they've done is they've started to work directly with the government in order to regulate the industry because, it's really been the Wild West. There was no rules. Everything was on the table. There was no way really for them to monitor these things. And so they've started working, the government, the SAT, has started working directly with the platforms. Now they're linked so that the government can directly see what each rental is generating as revenue, and then they can sort out the taxes that way. So when it comes to the tax rate for companies like ours, the tax rate is 30%. That's our income tax rate for companies. It's a flat 30%. The platforms for companies like ours, they don't deduct anything. They just say it's business as usual for you. We're not going to deduct anything. It'll be up to you to come back later and pay the taxes that are due to you. The reason they do this is because we're already registered. We're a legal entity here. We've signed legal documents. And so they have some recourse if something was to happen. For foreigners, and we will go through that don't have a company here, they're going to automatically withhold those taxes, and we will touch on that. But because they don't have any recourse, you don't live here, you don't have any kind of residency, and so they don't have any way to come after you for those taxes afterwards. So they will withhold it automatically. But for a company like ours, they give us all of the income, and then we have to sort out the taxes afterwards, paying a corporate tax rate of 30%. The EVA we pay is the same as everything. It's 16%. On all of the bookings that come in, there's an extra 16% that's added that the guest pays. They pay that VAT tax. For some reason, the government will send that to us, and then the platforms like Airbnb, they'll send us that tax income, and then we have to now submit that to the government. I think that they'll probably change that where it'll be done automatically, but for now, that's the workflow that they've found is the best. The ISH, think of it as the hotel tax or a lodging tax. It's a flat 3%. That one is paid automatically from the platforms over to the government. It never touches our accounts. And so that's nothing really you need to be concerned about other than knowing that it happens. Okay, I'm not going to go through all of this part here. I'm just going to touch on some of it. And with this second paragraph here, I'm just going to highlight that there is the possibility that as a foreigner, you are obligated to pay some taxes in Mexico. Depending on your status, if you have a registered company here, and at the very end of this presentation, you'll see the requirements for a resident. But if you spend more than 50% of your income in Mexico, if you have some really strong ties to the country where you're living here for the majority of the time and spending your money here, it gets in the gray area, and that's where you should really talk to someone to see whether you would qualify as a foreigner or more as a resident and needs to pay taxes. We talked about the RFC. Now, we as a company now are obligated as of 2020, end of 2020, we're obligated to attach our RFC. Remember, that's tax ID number. We have to attach our tax ID number to our Airbnb, and that's so that the government can track all of the income. The income is only going to be attributed to that RFC. It doesn't matter if there is 5 owners that are taking the money in their portions. All of the money, all of the tax income is going to be attributed only to the person that has their RFC attached to that Airbnb profile. Now we're just going to go through 2 scenarios that an owner can have. So the first one would be listing the property, and think of this again from the company perspective. So these are 2 scenarios that we can do at Samson Waters as a company. So we can list the property in the name of the owner. That would mean that we would create, again, Airbnb, VRBO, we would create a profile for you on those platforms. We would attach your information to that platform. whether you have an RFC or not, a tax ID number or not. We would attach your information to that. We would still do all the rentals, communications, all of those things, but your name would be attached. Therefore, if you have a tax ID number or not, different taxes would be paid depending on that status. Certainly for us, this is the most easy because we don't have to do any of the work. We just do our operation. The money goes into your bank account. We bill you for our services, and that's it. Super easy. It just really doesn't make a lot of sense for most owners because if you don't have an RC, you're going to be paying a pretty good amount of taxes, which is what we'll look at after. So I'll skip through that one and go to this main one here. And this is going to be a good news scenario too. This is going to be good news for most of you. A lot of people have been stressing out about, what the tax situation is. What does that look like for you as an investor? If you are considered to be non-resident of Mexico, so you are considered to be a foreign person, if you are able to issue an invoice to us on a monthly basis, then we can offset that expense where taxes will no longer be paid on that income. We're going to go through some examples to clarify this, but what I just really want you to understand is on a monthly basis, if you send us an invoice, and we'll see what one looks like, we'll look at an example. But if you're willing to send us an invoice, then essentially your portion of the income is going to be tax deductible here in Mexico. What you do with that in your home country, that's going to be completely up to you and your accountants in your home country to devise a strategy for. But as far as the government here is concerned, you can offset that expense and essentially kind of push that over to your home country. We're going to just go through a quick example here. It's written here, but I'd rather go through it. It's written in a little bit better format. So I'm just going to skip over to that. Okay, so a couple of different things here. The first one is what the SAT, the tax agency is seeing versus what's actually occurring. So that small graph at the top, you're going to see information reported to SAT. So what SAT sees is the administrator, so Samson Waters, and we're going to use $1,000 as income, just as an example, throughout our presentation. So they received we received $1,000. There was the 16% EVA that was collected from the guest, $160. So total Samson Waters received was $1,160. That's what SAT sees. In reality, if we look over to the right, the income flow was not like that at all. And again, we're going to make some inferences here just for these examples. In all of these cases, I'm going to use 25% commission. So 25% paid to Samson Waters as our example. So in reality, Samson Waters got $250 out of that, and you, the owner, got $750. We got the $160. You can see under the administrator tab in that second column. We got $160 from the guest in VAT, meaning we were only paid $360 and you received your $750. That's not what the SAT is seeing. In the one below, again, this is going to be, what the SAT sees versus what the reality is. So that income of $1,000 going to that tax accrual, the second graph here. So the income was $1,000. On our part, there's zero deductions because we don't have an invoice to deduct from. So now Samson Waters is going to pay 30% of income tax off of that, which is $300. There's going to be $160 that is paid to us, but we owe that to the Mexican government. And so in total, we are now going to owe the Mexican government $460. So you can see that with a commission of $250, we are losing $210 just because we didn't get that invoice. We're in the negatives with kind of these new tax rules and the way that they're looking at income coming in. Going over to the next one. So if we obtain an invoice from you, and the invoice or the receipt, however you want to call it, that receipt has to be done on a monthly basis, because here in Mexico, we have to file our taxes on a monthly basis. There's no quarterly, there's no yearly. we have to file them each and every month. So it's important that every single month we have that invoice from you. However, going through the same workflow that we did before, we'll see a huge difference. So with that $1,000 income, we're now able, and I'm just in that administrator column for now, we're able to deduct $750, which is the owner's portion of that income, which makes our base amount now $250. We apply the 30% corporate rate, which brings us to $75. Give me 1 second. Which brings us to $75. We still get that EVA, that doesn't change. So now the total owing to the Mexican government is $235. So, you know, as a company now, we're actually in the positives, and we are able to send that money over to the government without taking a huge loss. From your side, the owner, nothing changes. There's no extra taxes that are due. Again, if you send that invoice, there's no extra taxes that are due. There's really nothing else that has to be done on your side. You still get the exact same amount of income. The only difference is we now as a company are not in this gigantic loss, and we're able to continue servicing you and your properties. This is really just a comparison, just so you understand. We'll breeze through it, but essentially the difference is we go from, you know, the income tax, we go from having to pay $300, which the majority is not our income tax, to $75. Now, going over to the invoice section, it's a basic invoice. We are going to be supplying you with the template. So essentially, all you're going to need is to download the template that we're going to send you, and then just fill it in every month with the information. Now, some of the information that has to be on there by law is the name, the address. If you have a tax ID number, then you're going to add that. The place and date of issue, the RFC or name of the administrator, the person who's receiving the invoice, which would be us, which will all pre-fill in this invoice for you. So don't stress out too much about this. We're going to send this off to you. The description of the service, it'll always be the same. Rental income for the month of. The value, so the amount of money that was generated, that's your portion. And if we look at that example, this isn't exactly what it'll look like. We're going to send out one that's going to be done with our letterhead and everything, but this is just an example to show you what that looks like. So it's just going to be your name and information, the date, who the invoice is for. Again, we're going to fill this all out for you, so don't worry. It's got our tax ID number, which at the bottom here, and then it's just going to be the property, and then the description, and then the amount. That's $750. Now, all of this initiative has been done without any extra cost. It's been quite a few man hours on our part. We're happy to do it because, you know, we always want to be providing you with more value. That's always been our mission, is to be, that source of information for you. What I would say is this when it comes to the invoicing, because it does add a lot of extra work. So what I would say is, if you want, you will send us the invoice every month. It'll take you probably about maybe less than 10 minutes per month in order to download that, to fill it out and send it back. We will continue not to charge you anything if that's the route you take. If you say, listen, I just don't want to worry about this stuff, I would rather you take care of it, then we're just going to charge a small administrative fee of $15 a month so that we can hire someone in order to process all of these invoices, to add them into the database, submit them over to our accountant, and then process them. So we're giving you the option. There's no extra cost as long as you send it to us per month. If you would prefer that we do it, a $15 a month charge, and we'll take care of all of that for you. If you've got questions about that, you know, how that would look, you can always send us an email. But it's quite straightforward. Okay, this is really just a summary of what we've been talking about, so I'm going to pass over this. That's the portion that talks about taxes related to foreigners. It's not complicated in the fact that, yes, there's a lot behind the scenes that we have to do, and It's not easy from the administration perspective. From your perspective, though, the biggest thing you have to understand is we just have to have an invoice from you on a monthly basis for the income that's attributed to you, not the income you received, right? Because there's expenses and there's different things that come into play, electricity, but it's the income that was generated that's your portion. So it all really comes down to that invoice. That's the biggest part of owning property as a foreigner. Is it possible that the government changes that at some point? For sure it is. Is it possible that the rules will vary, that they might, change some of those? Absolutely. For now, this is the most accurate information we have. I can't promise that this will be accurate in 6 months, in a year. We will continue to work with Jorge and his team and keep you up to date on that stuff. But it's important to understand that these things sometimes do change pretty quickly. And the information we have now sometimes just won't be up to date for too long. So just keep that in mind. We're going to talk about the not registered with SAT, so the second option. So this option is, I don't think will really apply to anybody. And if this is applied to you now, I would strongly urge you to send us an email so that we can have a conversation about it. But this would be for people that are not registered with SAT and they're not using a property manager. So they don't have an RFC and they're not using a property manager. This would be foreigners because in the most part, if you live or if you're a Mexican national, you'll have an RFC. You will have to pay 20% of income tax off of the total. You are not eligible to deduct any expenses whatsoever, and you'll also have to pay 16% EVA. Now you can offset that and charge that to the guest, but you're still going to have to pay that. And the platforms are also going to charge you their commission off of everything. So you're going to pay 20% off of the total without any expenses. In the most part, with 99.9% of people, if you're using a property manager, at 25%, you will actually be paying less because there are some deductions that we're going to be able to do on your behalf because we're going to be able to pay for that bill for you and deduct it with our tax ID number. So to try and do everything yourself without being registered, really with the new systems ends up losing you money. So I would recommend that you have a chat with us, send us an email and we can organize that just to see what the differences would be. We can go over some exercises that so you understand that. The next one would be, and this does apply to a certain amount of people, when they purchase their property, there was 2 ways to do it. You do it in the most part through a trust, or you do it through a corporation. You open up a company here in Mexico, and then they would buy the property through the company, and then you would own that company. If that does apply to you, then we have a couple of options. One of them is we could operate the same way initially that I had said, where you submit us an invoice and then we move in that direction, or you can go from that RFC perspective. So there is, and I'm not going to go through how to obtain an RFC, what should I report to the SAT. If that's what you have, then you're going to need an accountant because you have to file your taxes every month. I am going to include Jorge's number and information at the end. I would strongly recommend that if you've got any questions on the tax side of things, if you have an RFC, if you're just unsure, I would strongly recommend you reach out to him. He's been a super valuable resource for us, and he's really helped us, come on board with all these things, sifting through all the bad information that's out there. So moving on. Okay, so when it comes to being registered with an RFC, everything only applies up to 300,000 pesos of income, then everything changes. And when we're talking about income, we're talking about they seem to use everything as income. Everything that comes in, they seem to use that as income, whether it's, the person, let's say that person damaged something and they made a payment through Airbnb, or they requested some additional services, transportation, whatever the case may be, they're using everything as taxable income. So anything up to 300,000 pesos, which is, 15,000 US, something like that, about 20,000 Canadian. you are going to be paying 4% income tax, and you're only going to be paying 8%. And you can see the graph is a bit small, but you're going to be paying 8% EVA, that's sales tax. Now, it seems very low. There's just two things to keep in mind, is that off of this first 300,000 pesos, you cannot deduct any of your expenses. So you're paying full amount, that full 20%, amount on your expenses. So you can't deduct any expenses, so you can't reduce it anymore. And you're paying 8% depending on your situation. Again, some things will vary on this part, but this is more or less the standard. 4% of ESR or income tax, and then 8% EVA. There's another 1% you have to pay on tours and things like that, but that's only if you're selling tours or transportation or any of those things. How do you have to pay your taxes? I've already mentioned it. You have to pay it every single month. Okay, so the ESR in this case, let's go off to the next one, but it'll be to a maximum 35% after that 300,000. So I've made a little graph here to make it really easy to understand. So from 0 to 300,000 pesos of income, total income, you're paying 4% on the total income, not just on the income minus the expenses, but on the total income. 300 to 510, you're paying 23, so on and so forth. All the way up to, almost 4 million and above, where you're paying the maximum of 35%. In the most part, I'd say that most of the people will fall somewhere in kind of the second or third column, that 300 to maybe 900 in that range, so 23 to 30%, which makes it quite expensive, even if you have a company. Yes, you can deduct some of your expenses, but deducting expenses here is really hard, especially if you're not living here on site. I'll let you go through this other stuff, but essentially just goes over some of the things that we talked about. You can deduct some of your expenses, but there's some rules and regulations. The lodging tax or hotel tax is, again, that flat 3%, and that's done automatically. Okay, getting towards the end here, this is really the last slide, or the second last slide, but when are taxes paid? On a monthly basis, having to be done before the 17th of the month. And if you don't, there's penalties that apply, and you'll have to pay some fines. So it's not easy. Seems like they've made it as complicated as they possibly could, but that's the system we have, and it's important to abide by those rules. I said before, and I misspoke, I said you have to file not yearly, but monthly. You do have to file monthly, but you also have to file an annual return. It's not super complicated because you've already filed every single month. So it's more just combining all that into one. When it comes to this, and I've included Jorge's information here. Again, when you download this guide, you're going to have Jorge's information. I would strongly, strongly urge you to reach out to him if you've got any questions, if you have an RFC, if you're not sure about if you would be considered a resident or not. I would strongly urge you to reach out to him. If nothing else, it's a good conversation. It'll give you some good information. This last page is really just to talk about, I've asked Jorge to say, listen, it's great that we're talking about this, but how do I know, right? How do I prove this? So I've asked them just to select this specific section from the tax codes. I Google translated it because I didn't want to mess around with the language, so I just used Google Translate, and I'll just read through it in English. The following are considered residents in national territory, meaning Mexico. The following natural persons: those who have established their home in Mexico. When the person in question, when the natural person in question also have a home in another country, they will be considered residents of Mexico if their center of vital interest is located in Mexico. It'll be considered the center of vital interest in Mexico in the following cases: when more than 50% of the total income obtained by that person in the calendar year will have a source within Mexico. and when they have the main center of their professional activities in Mexico. So I understand it's a little bit generic, and that's why I would say please reach out to Jorge. But if you think that that really doesn't apply to you, which is going to be a really big portion of you, you really just have to keep that invoice portion in mind. And we will reach out with more instructions on that invoice portion. And so, you know, if there's a few things that you don't quite understand about it, we will reach out to explain exactly how that invoice part will work. But essentially, that's the tax portion of the webinar. We're going to go into some updates. But first, I just wanted to reach out to the team here to see if there's any major questions. Sorry. Let me go to the chat here. Okay. Give me a second here. Oh, there we go. Okay. Okay, so someone asked, are property management fees deductible? It'll depend on the structure of your ownership. So the only time they would be deductible is if you have an RFC, because then as a Mexican company, we can issue you a factura. Remember, that's that official receipt. So we can issue you a factura, and then you can deduct that here in Mexico. As far as your home country, I suspect that in the most part, as long as you just have a plain receipt, meaning your financial statement from us that outlines all of those things, along with in the Google Drive, the receipts or copies of the receipts that we have for expenses made on your behalf, then I suspect for most of you, you will be able to deduct that in your home country. Here in Mexico, the only way you can deduct it is if you have an RFC. Okay, give me a second here. Okay, so someone's asking, if I'm a foreign person and I just don't want to deal with that whole invoice and I pay the $15 monthly fee, I would have no other tax obligations. Again, just kind of as a disclaimer, depending on your structure, if you're a resident or not, if you qualify for residency or not. If you're, like most people, just a foreign entity, from every indication that we have talking to Jorge and from the information we presented, you wouldn't have no tax obligations. If we use that $1,000 example, you get your $750. And when I say you get, I mean, certainly you don't get all of that amount because there's bills that we need to pay on your behalf. But whatever taxes are associated with that $750 is offset with that invoice. Now, I can't speak to what you would owe in taxes in your home country. Essentially, all you're doing is offsetting that. The government is saying, okay, they're a foreigner, they're able to offset that income and then bring it into their home country and, you know, do what they want with their accountant there. But as far as Samson Waters and the owner is concerned, there would be no more tax implications at all within Mexico. Is there any other questions that came up? Those are the main ones. Okay, let me just read this. The email for Jorge is in the document. If you want to download the document, you'll see. I'll just quickly go back to it. It was this one right here. Oh, Jorge's email. That's a good point. We don't have Jorge's, we just have the website there. Okay, yeah, I've got it here. Jorge typed it in the chat. I'm going to type it in the chat here. Unless Jorge's a presenter, I think maybe you can see it. Just in case, I'm just going to put it here. So that's Jorge's email there. If you miss anything, you can always reach out afterwards. Yes, we are. So someone asked, are you going to be able to review the presentation after? We are recording it. We're going to be sending it out. If you're not on our email list, I'm going to write our email here, our general email. So you can write us in if we're not on your email list, and give us a day or so to get this organized and send it out. If you're just not on our email list, send us an email, or if you know that we're not, send us an email and ask to have it sent over to you. Yeah, so there's another chart. I'm actually going to review that workflow chart just so that you understand how it works. Okay, give me 1 second. Okay, someone asked, after invoicing Samson Waters, so providing a receipt to Samson Waters, what would be responsible for paying on the 17th? There would be nothing. That's just when the taxes have to be submitted. Now, if the case is that Samson Waters is managing your property and we are the only entity that the government is seeing, they don't see you, they only see us. So we as a company have to make sure that everything is in by the 17th of every month. If you give us an invoice, there's nothing else that you have to do. You send an invoice and that's it. We're going to review that workflow chart right away. Okay, somebody asked, they lived in Mexico for a while, they have income in the US and Mexico, they have property in both places, what are the requirements for paying taxes? Your situation certainly is a little bit more complex. I would strongly suggest that you reach out to Jorge to talk about that, because you get into that gray area where there's room for interpretation. So I would ask that you refer to Jorge for that, please. There's a couple people that have written for information in Spanish. Tenemos una presentación en español también. Vamos a, si tú puedes, por favor, enviar un correo al el correo info@samsonwaters.com. Envía un correo a eso para preguntar por la presentación en español y vamos a lo enviar, por favor. Okay. When would and there's just one last question here. When would the invoice need to be provided? So we are going to need it within, and I'll confirm this, and we will send, like I said, when we send that invoice email out, we're going to send a confirmation of this, but you receive your financial statements from us on the 5th of every month, very early in the morning. So that's the number you're going to need in order to create the invoice. So preliminary, I would say between the 5th and the 10th of every month, so that we can get everything in order to send it off before the 17th, because now we have to gather it, send it over to Jorge and his team, and then he submits it. So that'll give us a full week in order to do that, but we will confirm in that email it's going to send out with that sample invoice. Okay, so let me go over this workflow document. Okay, now this is really just you just have to follow your specific scenario. And if you want, you can experiment with it and pretend like you're in one category or the other. But we're just going to follow this down. So, do you have a property manager? Okay, most of you do. I'm going to go down the right-hand side to yes. Do you have an RFC? In this case, most of you don't. I'm going to go over to the left. No. Are you willing to provide an invoice on a monthly basis for your revenue? Now, are you willing to provide? That just means, are you willing to authorize, if you pay us to do it, are you willing to authorize us to create that invoice on your behalf? Or are you willing to send it on a monthly basis? I'm not sure what each of your tax situation is. Maybe for some reason you just cannot do that. We'll go to the yes first. So yes, I'm willing to provide. Your property manager will deduct your portion of revenue and will pay taxes in Mexico on the difference. You will be responsible for paying taxes on the income in your home country. Again, that's up to you and your accountant. no taxes will be due in Mexico. Just to explain this a little bit, but we did talk about it. But now off of that $1,000, we can now deduct your $750. We pay our 30% taxes off of the remainder, which is a $250. That's the difference we're talking about here. If you said, no, I am not willing to provide you with an invoice, then you go down to the left side. Airbnb will automatically collect 35 in taxes. It would be 36 in taxes. That's written wrong. 36% in taxes, 16% EVA, which is sales tax, and then 20% income tax. So 36% would be owing. And then you can just follow that throughout. On the left-hand side, we just put a kind of a short square there that has all the definitions so that you understand what some of these things mean. But the one I followed is primarily going to be applied to most of you. If not, just follow it down and it explains what your burdens are. Now, if, for example, you don't have a property manager and you have an RFC, we go down to the left. It says what you're going to have to pay depending on your income. If you have a property manager and have an RFC, there's just one difference there. So that's all the way to the left, or sorry, all the way to the right, that bigger box. You can choose to be responsible for paying your own taxes, meaning you can send us an invoice and kind of like not even utilize your RFC. You're just going to have to pay or submit your taxes every month, but you can send us an invoice and use that strategy. Or if you want, and we have some owners that have decided to continue with using their RFC, meaning we are going to create a profile for them, register it to their company. We'll be able to deduct some expenses and so on and so forth. It's a little bit more complicated, but for some, they really need to show that Mexican income within that Mexican company. So if you've got some scenarios that are just a little bit outside of what we talked about that are complex and you're not sure, if it's a tax question, certainly Jorge is there for you. If it's more of an operational question, then that info email, or reach out directly to your partner. So in Puerto Vallarta, reach out to Josh or Carrie or Curtis, and so on and so forth, with your questions. Here in Playa, you can reach out to that info email. Okay, so that's the workflow. Again, if you go to that chat part and on the top right, you'll see a handouts tab. That's where you can download those things. I noticed some of you have downloaded already, but there's many that haven't. So in case you joined us a little bit later, handouts tab in that chat box, you can download those 2 documents. That's the tax portion. Super dry, not really exciting, but it's it's just something that we all knew has been coming. This kind of increased regulations from the government. For now, it's great news. We're able to offset, in the most part, we're able to offset your income with going through our company. So that's great news for most of you. If you got any questions, Jorge or us are here to answer them. So I do want to move on to some updates. Now, if you are an owner in Playa or the Riviera Maya, Tulum, so on and so forth, these will be applicable to everybody. If you're listening in from Puerto Vallarta, from Cabo, Nayarit, from the Yucatan coast, some of these, like I said, won't have been implemented yet. But if you're interested, then it's some good information for you to understand some of the initiatives that we're working on. We are, the partners, we're getting together every single week, more than once a week. We get together within our offices. We're passionate about creating value for you. And so we're always trying to find ways to do that, whether it's saving in expenses, whether it's finding, creative ways to make more money, or to find different providers, or to try and offset some of the expenses and push those maybe towards the guests or suppliers, or whatever we can do to keep more money in your pocket, then we're going to do that. And some of these updates are specifically related to that. So I'm going to share another document with you. So the next one I want to talk about is the linen program we have and the electricity collection. Both have been, people have had questions on both, and so that's why I found it very important to include it here. Now, this is the linen program. The linen program, without going into too much detail, we found that it was important for us to have a really consistent experience for our guests. And consistency right from the start, from the way the listings look, from the descriptions we're using, the pictures, but also from the experience that they have when they're on site. And a big part of that was linens. We used to do it on an individual basis here in Playa. Some branches are still using it. And the headaches that we face are, what if we buy a set at Walmart or Sam's Club or Costco, right? So yes, good quality, it works well, it's not too expensive, and it comes with everything you need for a king size bed, for example. But what if the pillowcase gets ruined? Or what if the fitted sheet gets ruined? Now that set is kind of garbage because, we start seeing mix and match between different sets because Costco doesn't have the same pattern all the time. And you start to have this kind of lower quality experience from the guest. One is faded a bit more than the other, and it looks bad and it reflects bad on us and on the property. And anytime we create that, expectation where we just didn't meet it, the guest is likely not going to want to come back. They're going to choose somewhere else that's creating that consistency for them. So what we've done is we've reached out to several providers, and we came out with a wholesale system where we buy a lot at once. It's good quality. We didn't go with the worst quality. We didn't go with the ultra high quality because there's not a ton of value in that either, because the sheets and things do get ruined or stained regularly enough. So we go with this kind of middle, a little bit higher than middle quality. And it's been very well received. If a pillowcase gets ruined, if a sheet gets ruined, if a towel gets ruined, we're now ordering, one piece at a time or replacing one piece at a time, which makes it much more efficient for us. So what I've done here is just a comparison. There's a couple pages of comparisons. What I've done is, because we've had a few owners that say, well, this seems expensive, right? You guys have billed me for these linens. This seems expensive. And so I said, okay, let's make sure that what we're offering is actually what we say it is. It's a more cost-effective way to do it. So if I look at some of these prices, and we'll just rifle through this, I went and picked a decent quality king size bed sheet, and that would be 2 sheets and 2 pillowcases. I didn't pick the lowest quality because we don't want that either. The lowest quality ends up usually being the most expensive because we turn it over more often. So some decent sheets. Sam's Club is charging 1,635 pesos. Samson Waters is charging 1,152 for the same thing. We look at bath mats. They didn't have great ones, but I picked a decent one that I could find. At Sam's Club, you're paying 152 pesos. With us, you're paying 190, a little bit higher, but certainly the quality is better. Face cloth, we are cheaper. If I go to the next one, we talk about bath towels, we talk about hand towels, and we talk about beach towels. In every single case, we are cheaper with our suppliers, and we are constantly looking for new suppliers. I know in Cabo, for example, we have some issues with that because the suppliers out there tend to charge a little bit more. So for the time being, yeah, it might be better for us to utilize some of those companies like Costco until we find that really strong provider that can give us a better rate of return. Just because it's working somewhere doesn't mean that it's always going to be the solution. So we have to be creative and make sure that we have it working in every single location. Just did a quick comparison here, and full disclosure, we're a very open company. There's nothing that we hide. Here is on the right-hand side, this is the price. This is the price of each single item. A king sheet is $25, a queen, $24, so on and so forth. And on the left-hand side, I just did a comparison between what we saw before. So Sam's Club and I'll use as a USD number, but Sam's Club total for one full set, so one king bed, one towel, one beach towel, one bath towel, so on, was $142. Samson Waters, our cost $108. Now, depending on how many bedrooms and how much occupancy you have, that number is going to go up. We're going to bill you for an entire set. But keep in mind that it's a pretty decent amount less expensive. And that's only going to get better for you, because as we find better providers and we negotiate better rates with them because of the buying power we have, we can continue to create a bigger spread between what you can get at the store and what we can offer you here. Okay, that's the linen program. Like I said, there has been some questions about that and sometimes some confusion on how it works. Just keep this in mind. This is 100% to try and service you better and to try and create more value by decreasing your expenses. This is not something that is fun to administer. This is not something that, we're not making and selling these sheets ourselves, pocketing all this money, right? We are just trying to do this in order to make this better for our guests and better for you. And so if you can look at it from that side of it to say, they are doing everything they can to make this better for me, then sometimes it'll put things into perspective a little bit more. But if you do have questions, reach out to us, and we can clarify or have another conversation about some of the other questions you might have. The next slide is talking about electricity. Now, this has been the biggest point of contention with most people. They have been, we've worked with a lot of people, taken feedback and tried to create a system that works as well as we can. And it seems like an easy enough thing. We'll just collect electricity money from the guests. Because what we say is, the industry is going to more of this pay for play type model. Hotels, airlines, everybody is starting to do that, where you get your base, service. In an airplane, for example, you get your seat, then you have to pay extra for your luggage or an extra luggage. You might not have any food included. You got to pay extra for everything. So everybody is going to that, and we're not immune from that. So the way we look at it is, listen, we are going to, or the system that we were using anyways, we're going to say, you have no electricity included. We are going to give you the best price that we can, according to our algorithms and the way that we price things. But now you're going to have to pay for electricity, or you're going to have to pay for some of the extras that you might want, right? Extra cleanings and things like that. Because it didn't make sense financially. Because if we offer all those things, let's say we say electricity is included and all cleaning every day, and we'll give you beer and all these different things. Well, that means now, if we use $100 a night as an average, now that 100, we have to charge, let's say 120. So now when someone goes online and sees 120 versus 100 for the person that doesn't offer that, they're almost always going to choose that 100 because they're seeing those two products and they're assuming they're exactly the same, and they're just not willing to pay that extra. So what we would rather say is, hey, listen, we're going to give you the base. If you want those extra services, there's going to be a cost attached to it. So with electricity, what we have been doing is we will take a meter reading on check-in. We will take a meter reading on checkout. And then we will charge you accordingly. It hasn't been easy. Airbnb won't support us on that. They will say, no, that's not damage, therefore you can't take it from the damage deposit. Guests will not pay us. We'll go collect cash and they'll leave early, or they'll say they don't have cash, or our hands are tied on a lot of the situations. And we have tried multiple different angles to go after this, try and charge their credit card or go after them on Airbnb or collect cash. And we got it to a decent amount, but nothing phenomenal. So what we're doing now is transitioning to a different system. What we're going to do is include a per day cost to account for electricity. I can't say that this is going to be perfect either. Like any initiative, there's going to be some good and bad to it, and we're going to adapt it as well as we can along the way. But just be patient while we kind of tweak this system. We feel that this will likely be more beneficial, meaning you're going to recuperate more electricity credits to offset that cost. But like anything, there's going to be some risks, I guess I could say. There is some potential that this might affect the rentals. When we start dealing with algorithms, they're pretty precise. And so any variable we throw in there could have an impact. We're going to monitor it super close. We're not talking about adding, $100 a day, right? We're talking about adding a few dollars a day. You can see on the left-hand column for a studio, $275, all the way up to a 4+ bedroom, $10 a day. These numbers don't come from anywhere. We did a lot of research on bills that we had, and we took the average from those bills, and then that's where we got these numbers. If your property for some reason is a bigger consumer, maybe your air conditioners are, maybe they're older, or whatever the case may be, your property is consuming more electricity, we can then go in and tweak it one at a time. Once we start to see how much money is coming in and whether or not it's covering the total expense. Our goal is to cover 100% of your electricity bill. Is that going to happen every single month? Probably not, but I think on the average, we'll hopefully get pretty close. The way this is going to be added, you're not going to see this as an extra line item on your income statement. If you look at that guest invoice screenshot that I did, so this is an example that I took. So let's say the accommodation fare, the nightly fare was $156. There was a cleaning fee attached. Oh, I put that square on the wrong one. Sorry. That square should have gone to the electricity, the one just underneath. That electricity is what we're charging the guests. So in this case, they were charged $8.25 in electricity. Then there's the VAT. The VAT is the taxes, the EVA taxes that is being charged directly to the guest. So we are seeing that as income, and then that $32.16, and then we have to now send that over to the government separately. And then the host channel fee. I saw someone ask, what's a host channel fee? The host channel fee is the fee that we're getting charged by the platform. So this was an Airbnb booking. Airbnb charged us $6.99 to use their platform to get this booking. So this $8.25, and excuse me, I put the square, that blue square on the wrong one, so it should have gone down to the electricity credit one. That's this new line item that we're adding. So that $8.25 is automatically going to be added to the owner's portion of the income. So it's going to be, total, or the net income minus the commission paid to Samson Waters plus the electricity credit. So it's just going to be added as income. If there's ever a doubt, if you have questions, if you want to see a screenshot, we're always happy to do a Zoom call to say, okay, let's go through this booking and we can show you that that's happening. I understand this is a little bit less transparent because you don't see it as a separate line item, but it's directly going through the formulas just to try and reduce or not decrease, but not raise your fees. In 8 years of operation, we have never once raised property management fees, which I'm extremely proud of. This is how we do that. We automate things so that you don't have to pay us more money to have people doing this. So yes, it's less transparent, but if you've got any doubts, get in touch with us and we will do a screen share. We will send you screenshots, whatever you need to have that faith that we're not keeping that money, that we're actually sending it off to you. So that's the CFE. This is an initiative. Please keep that in mind. A question that just came in, actually, it's really a good question, is will we continue to have a monthly electricity bill or see the monthly electricity bill? Yes. So the difference is now in your, and again, not for everybody, not in every single office, but you're going to see a line item that says, collected, and we'll see in the next slide, because I also want to touch on the monthly financials, but you'll see a line item that says, electricity collected from John Smith, from so on, and there's $20. You'll see that as an income, right, as a deposit in your financial statement, and then you'll see the expense of the CFE or the electricity bill. So now you will pay 100% of the electricity bill like normal. That won't change. If it's whatever, $200, you're going to see a $200 bill. You're going to have access to that bill. We're going to scan it and put it in your Google Drive for you to look at. The only difference is now your income per month will go up per booking because there's going to be that small amount added to each booking. We're going to wait this out for a month or two or so, and we're going to now go back and do another deep dive into Are we covering costs? What the percentage is? Do we need to increase that? We're going to do the best we can to try and tweak that system within the coming months so that it works properly. But you're still going to see that expense on your monthly bill. Okay, the next one I want to go to, because there's been a lot of confusion about this, and I understand it, so I really want to take a few minutes in order to share this with you. So this is a sample monthly statement. Now, the big confusion has been with the two columns on the right-hand side, amount and balance. Before I go into that, I just want to highlight, this is a typical statement. You can see at the bottom, I was talking about it before, 3 or 4 lines in from the bottom, this electricity excess paid by the guest. This is an older statement. We're not going to see this anymore. It's just going to be added as income automatically in your statements. So I just want to highlight that that's something that you're not going to see anymore. You're still going to see the rental income. You're still going to see all the expenses the same, just not that one. Okay, so just talking about the two right-hand columns, the amount and balance, this is where the confusion has been. You have to think about this almost like a bank statement. Your balance is what you have in your bank account. Doesn't matter, how far back we're going. If you look at that top right corner, it says $2,495. This owner on the 1st of February, February, this owner had $2,495 in their account. Regardless of what happens, that's what they started the month off in. So the balance moving down is as income and expenses move up, the balance, or thinking about it as your bank balance, moves up or down depending. That is not what you earned in that month. That's just telling you what your Samson Waters bank balance is at any given time. The amount within the month, so that amount portion, think of that as a snapshot of what happened in that specific month. So in February, this is all the expenses and the incomes that happened. There was a management fee, there was an internet bill, there was a disbursement of rental income, which comes as an expense. And then at the bottom, there is also a line item for income. So there was also income, which comes in at the deposit. So if we look at that kind of bolded section at the bottom, it's hard to see because I've grayed out the name, but essentially it's just the total for that month. So in this month, this owner finished in the positives by $1,242.90, counting the expenses and the incomes. But it doesn't matter because let's say, 1 month we dispersed a larger amount than you made that month. So let's say your account balance was at $5,000 and you only earned $2,000 that month, but we dispersed $4,000. Well, that bold part might be a negative because in that month you were in the negatives because we dispersed more money than came in. You have to use both in conjunction with each other. Your balance is what you have currently. Your amount is the incomes and expenses for that specific month only. So I hope that alleviates some of that confusion. I apologize because this isn't a conversation I had at the start with any of the owners. I've been dealing with it long enough that, I just understood it, but I hadn't understood that people were having some confusion there. So my apologies for not explaining that off the start. We've since started doing that. So appreciate the feedback that we've gotten over the last months. Okay, so that's essentially the slides that I wanted to show you. The last thing, and I didn't create a slide for it, but the last thing I want to talk about that we sent out in the email is just WISE or TransferWise. They used to be called TransferWise, now they're WISE. It's a banking system that I suggest that you use. I don't own the company. I don't have any shares in the company. So it's not really beneficial for us in the sense that it's not a financial benefit. We just found that when we switched over from our traditional banking system to our WISE banking system, the savings were unbelievable. Obviously, we have more expenses in Mexico than you do, and we move around a lot more money and receive more money than you likely do. But it is a great system anytime you want to convert money from one currency to the next, anytime you want to send money from one country to another. It's unbelievable how much money you're going to save doing that. It doesn't cost anything to start this bank account. That's why we recommend it. You don't get charged fees every month, nothing. One thing I will suggest is this, or make a comment, because some people, they'll go in and they'll look at the fees and it'll seem high, the bank transfer fees, because they work on a percentage. So if I'm going to transfer, let's say $1,000 from USD to pesos, the fee will be really high, but it's doesn't matter because the exchange rate they're giving you is much higher than the bank. So in every single instance, that more than offsets the fee you're paying and gives you a bunch of extra money from your USD. I would always encourage you to do a test if you don't believe me. Go to your bank's website and pretend like you're going to transfer $1,000 of USD to pesos or whatever, and then go to TransferWise, and you can just do it on their website. You don't even have to sign up, and then do the same exercise, transfer 1,000 to another, and you'll see the money you're actually left with is significant. And so, you know, it doesn't matter if you do it or not. I'm happy to provide the information because I'm passionate about trying to help people save money. What I will say is, you know, the only financial benefit for us is TransferWise or Wise, sorry. What they say is, listen, if you get people to sign up, every third person that makes a transfer that qualifies, it's not just signing up, but that has to transfer money, we're going to give you 50 Great British pounds. What we're going to do is basically kind of take that and then do a draw to all the owners that have signed up for the equivalent of property management fees. So kind of like push that savings, you know, any of that income off to the owners. So if we collect, you know, enough for 2 or 3 people to have free property management fees for that month, we'll do a draw, and then we'll draw out 3 months of management fees. So it's just, you know, another way for us to kind of help you out, because that's always been the goal. Just reading a few more questions here, because at the end, we're really at the end of the presentation. There is some time now just to ask questions about anything. Some of them will probably be better, you know, maybe we'll email you with some of those answers. We'll also take in some of these questions and maybe in the email that we'll send you for the invoice or that receipt that we need every month. We can include maybe some of the questions that we hadn't really touched on. Okay, any questions now? I'll kind of stay online for maybe 4 or 5 minutes. So any questions, now is the time. If not, if you're going to sign off, I sincerely thank you for joining us. I know this stuff is not super interesting. Hold on, a question here. Yeah, Jorge's just saying, listen, just send me the emails directly to me because I will be able to answer them all. I know this stuff is dry, but it's important because we don't want to run into a situation where we're non-compliant and, you know, 2 years from now, all of a sudden we get audited and there's all this stuff that we have to do at that time. So it's better to be proactive and try and, you know, become compliant as quickly as possible. Someone did ask, when is all of this going to start taking effect? We're dealing with Jorge just to get the last of the paperwork done because we had to do some stuff on the legal side with registering with the tax office in a different way. Just some additional paperwork that we had to do. So I suspect that probably by May 1st, this is going to be coming into effect. Look for that email to come out just with some additional. Don't worry about it now. I mean, you know, until you get an email, there's nothing that you have to do. But just keep in mind or keep an eye out for that. Okay, someone said that the presentation is not dry. Thank you very much. It's appreciated. Okay. Perfect. Okay, so it looks like a lot of people are logging off. So from all of us, from all of the destinations, we appreciate your business. We've always believed in growing in a way that is going to keep the service level. You know, there's been a few bumps and things along the way in trying to understand some of these initiatives that the government have and trying to navigate that for you. We always try to act as that buffer between you and the headaches that happen in this country sometimes with services and different things that don't always quite work the way we'd love them to or we'd like them to. So yeah, we will always put your needs above ours, because we wouldn't be here without each of you. And so from all of us, we really thank you for your business. All right, I'm going to sign off. Thank you so much. And we will try and make this a bit more of a regular thing, doing some more regular webinars on different topics that we find are important. So keep an eye out for that. Have a great rest of the week, and we will talk to you all soon. Thank you.